Hey, you guys, this is Tamiya Robles from FixMyCreditNow850.com. Again, I am the owner of FixMyCreditNow850.com. So right now I'm going to go over with you what mortgage lenders are looking at when they're looking at your credit report, right? So a lot of customers come over to me and they before they sign up, they swear they already know what's going on with their credit report. They're like, "Oh, you just need to clean up a few things. That's it." Or they'll tell me they paid a whole bunch of debt, which is probably not a good thing to do. As far as I'm concerned. Uh, but yeah, and then I look at their credit report and I'm telling them from a credit expert's perspective what needs to be done. And then the mortgage lender is going to say what they want done. So basically, if you're trying to purchase a home, what the mortgage lender wants fixed on your credit overrides what I want fixed on your credit, right? But we do work hand in hand. So the mortgage lender will look at your credit report, make some observations, make some suggestions, tell you to come over to me. I'll look at that. I'll confirm that that needs to be removed. The items need to be removed, or missed payments need to be overturned, or maybe you need a credit score boost, what have you. And if there's little extra stuff I can do in the meantime, I'll add to it. But inclusive of what needs to be removed from your credit report is they look at the debt to income ratio. So if you have a ton of debt, that could negatively impact your credit, your approval rating for a loan, any loan, but in particular, since we're talking about a mortgage loan. So I took a client of mine, I took her credit report. This is a new client of mine. Her credit scores are bad, but her overall credit is very bad. It's worse. It's worse than the score, right? Like I've seen a much worse score than this, but her credit profile as a whole, she has a whole lot on her credit, but she has a lot of open debt. And so I decided to use her credit report. I thought this would be a good example of a bad credit report and what a mortgage lender will look at. So we can kind of go through it real quick. All right. So as you can see here, this is a oh wait, that's a positive collection. I mean a positive account. All right. So I'm gonna go straight to the bad ones and then go to the better ones. So this is a closed account. We're gonna look for open negative accounts. So like I stated in previous videos, when you're looking at a credit report, in particular SmartCredit, a lot of them are, you want to pay attention to the colors. They color code everything. So if you're seeing reds and oranges, yellows, anything other than green, then that is a problematic area and you want to pay attention to it. So with this one, this client of mine, she has a negative account under credit acceptance. It is an open debt and it has 120 missed payments every single month going back to 2021, if you can see that. But she's trying to apply for a mortgage, and the mortgage lender sees this as a major problem. So there is a balance owed of over $14,000. So this is a debt, an open and active debt that is going to go against her when they calculate the debt to income ratio. So that's just one account. So we're going to go continue on. This is a closed account according to the mortgage lenders I've spoken to. They don't care about, most lenders, not all lenders, but most lenders don't care about closed collection accounts. And I apologize. I don't know why SmartCredit is flickering like this. Um, it usually doesn't flicker this bad, but I think they'll fix it by tomorrow. So then here's another account. It's a collection charge off. As you can see, it's closed. Now, in the credit repair world, I would need to, like, this is making me itch. Like, I want to take this off so bad. I want to dispute this and get it removed so bad. However, the mortgage lender isn't worried about that. They're not worried about this account. Okay. So there's a repossession. You see that? But it's closed. Again, as a credit repair specialist, I want to attack it. I want to work on it. I want to get it removed, but the mortgage lender doesn't care. It's not an open debt. Now we have this company, NCB. NCB, it's an open account and it says collection account, consumer disputes after resolution collection account, right? And it says collection account. No collection account, if you paid attention to any of my videos, no collection account should be reporting as open. It should be reported as closed. This is sold debt. But this is hurting her because they're reporting it open. They're also reporting it 120 days late. That dramatically affects your credit score. Look at that, right? These are actually inaccurate reported missed payments. And the balance owed is the $3,805. So on top of the $14,000, you might as well add another $4,000. So now she's $18,000 so far in debt, right? All right, so now we have this here. This is more than likely it's the same account. Yeah, it's NCB, but it's open on TransUnion, closed on Experian. Is that the same account? Let me see here. Yep, it's the same account. They just didn't specify on the Equifax report. So now we're in another collection account. This is credit MGMT. So that's credit management. I'm just familiar with that. So this is another collection account, place for collections. This was a utility bill, looks like an energy bill that was sold to credit management. And then as you can see, it says open, even though the other two says close. There is a balance on there for $732. There should not be a balance owed, okay, if it's in collections. So the mortgage lender will want this removed because, again, this goes against her debt to income ratio. So now we're at 18,000. Now we're pushing 19,000 of debt. Now, I was told that this particular client does, her and her husband make really good money. That's great. Again, these are the things that go against your debt to income ratio. So this has to be fixed. Now, if you look at her inquiries, these are a lot of inquiries. This is a lot. This is a ton. A ton of inquiries, right? Now, like I always say, this is a judgment-free zone. When you guys come over to me, I don't need the backstory. But if you could pay attention, I don't need the backstory because regardless of what your story is, it's on your credit report and needs to be removed, right? It's hurting you. It's preventing you from getting a house, preventing you from getting a car, whatever you're trying to accomplish, all right? So I could tell off the rip, just looking at her inquiries, that at one point she was trying to purchase a car because a lot of these inquiries are car related, right? When you go to apply for a car, they run your social security number through so many banks, and this is the result of it. So she does these, a lot of these are not even open accounts. We did see that she had multiple auto loans. As you can see, this is one of them. This is another one, even though this is a closed account, it's another auto loan. But this is why she has so many inquiries on her credit report from applying for a car. All right. So again, this is what mortgage lenders look for. If I wasn't clear, let's just go over it one more time real fast. Okay. This is your credit report. This is a summary of the credit report based off of SmartCredit. Okay. you're going to see some open accounts. It says 6, 5, and 6, right? Some are derogatory, but we're going to go straight to the source. We're going to look at the pretty colors. Anything other than green, we're going to pay attention to, right? So this is black. We're going to check and see if these accounts are open. These are closed accounts. We're going to move on. Again, mortgage lenders are looking for open debt. Okay. This is an open debt. See all the red. This is a joint account, open debt, and it's reporting nonstop 120 days of missed payments. All right. Now, how much is the debt? You want to go under balance owed. This is what's going to go against her with the debt to income ratio. All right. Now we're going to move on. More colors. Repo. Closed. They're not worried about it. So you don't worry about it. Okay. You keep going. Another collection charge off. Closed. We're moving on. Mortgage lender isn't worried about that. Repossession. Closed. Mortgage lender isn't worried about that. Joint account. Closed collection. Not worried about it. We're going to keep going. Now we're in a collection account. Open account. It's collections open. And then there's a balance. Balance owed $3,805. Problem. Okay. Problem. Now we're going to keep going. That's the same company. Remember, we talked about that. Now it's also showing open as under TransUnion. So ultimately, this whole account just needs to be deleted. It's affecting the debt to income ratio. That is a problem. Another collection account. Okay, utility bill, utility company, sold the debt. They have it here in TransUnion reported as open. Okay, that is a problem going against the debt to income ratio. All right. So, and then again, you have these inquiries. Now, some lenders tell me they don't care about the inquiries, but I'm going to tell you right now, the inquiries are going to become an issue at some point. I know when I purchased my first home, I had a bunch of inquiries and everything was straight. They didn't complain about the inquiries until it was almost time to close. And I had to quickly get those inquiries deleted. And any leftover, I had to explain why I had those inquiries. So it worked out in the end, but that's what I'm saying. A lender will send you over to me and tell you, okay, these accounts need to be removed. And if they don't say anything, and I see this many inquiries, if I see more than 10 inquiries, I'm going to take care of it automatically. That's automatically going into your dispute because I know it's going to become a problem in the future. So yeah, take care of that. But anyway, I'm going to more than likely have a mortgage lender come on and explain the debt to income ratio calculator, the mortgage calculator, because I personally don't need to know that. I'm not well versed in that. So I just know what mortgage lenders are looking for. I don't do the whole overall debt to income ratio. So it's on a case to case basis. So if you work at McDonald's and you have all this debt and you're trying to purchase a house for $500,000, then they're going to pull your information and calculate all of this, right? And then if you are a CEO of a company and you got houses and boats and airplanes, I don't know. They focus on that. But I just know what they need removed from a credit report. So hopefully this helps. If you're thinking about purchasing a home, please look for yourself. Like take this video, look at your own credit report and determine whether or not you think you should be good. If you see some problems and you see open debt and you want it removed, just come to me before you even go to the mortgage lender because you already know what they're going to say. All right. My rule of thumb is basically whatever the bigger the open debt is, those are the ones you want to focus on. And then I can get them deleted. And then you could go to your mortgage lender or find a mortgage lender. And if they feel like the smaller ones need to be removed as well, based off of your overall debt to income ratio, then we can fix that. No problem. All right. Again, this is Tamiya Robles from Fix My Credit Now, 850.com. You can check me out on Facebook. I have 5 Facebook groups. My main group that I'm always on all the time is Credit and First Time Home Buyers Plug. You can give us a call. My number is 267-532-9838. You can send me an email, leave a comment, what have you. But hopefully this helps. There's going to be more videos to come. You guys have a good day.